Hi, and welcome to the Market Alert for Monday, the 22nd of August 2016. So Friday session saw a very narrow range again. We can see here that the range is only around 95 points, which is not a lot when you consider that once you've got the market starting to move, then you've got to get 20 points minimum before you can start thinking about moving the stop to break even. So quite a narrow range once again. That said, we had a buy signal. The market moved high, drove through the 18,550 level and also the scalp, which is the cue to then start actually trailing the stop. So 50% below the rising lows. You can see there this being moved. Of course, this one will send it lower, so you wouldn't bother with that. You want the rising lows where the actual stop actually moves. And this takes us up to the 18,563 level, which also is around 46 points profit on the trade. At this point on Friday, I sent out a note saying forget the rest of the session, and certainly the rest of the session was a bit of a non-starter really. The evening session also only managing to pull in 41 points there. And again, in the daily chart, you can see that this market has been sideways now for the last 2 weeks, and I would expect that to continue at least for another week as we go into the bank holiday weekend, which is of course a week today. So sideways is going to be the new normal, I suppose, for the next week. News-wise, let's just have a look, see what we've got coming out this week. So nothing on Monday, so expect the market to be very, very quiet again. Think about preserving capital and waiting for the market volatility to improve. If after the first hour there are no profits, there certainly won't be any unless something comes out of nowhere, black swan event, geopolitical news or whatever. Other than that, expect it to be sideways. Tuesday, not a lot either. Wednesday, only the crude oil inventories at 3:30. We've got the Jackson Hole Symposium this week. Yellen's going to be there all day on Thursday, so really nothing until Thursday, and then she's there on Friday as well. So again, Thursday, Friday might see a pickup, and Saturday also could see the release of some news as well during the weekend when the markets are closed, which is a good time to put that out. So Thursday, Friday, Yellen will be speaking. More so Friday, as you can see there. It's tentative at the moment, but she is penciled in, as it were, to actually speak on Friday. So it could be a very quiet week this week, and not too dissimilar from what we've already seen. News-wise, I see that the Sunday Express today are picking up on Deutsche Bank. It's about time the mainstream got hold of all this potential fallout from Deutsche Bank. It's taken them a moment or two to get on the same page, but we're now seeing headlines like this. We should nationalise German banks, warning Deutsche Bank teetering on the edge of crisis. Welcome to the party. This has been going on for the last year and is getting worse by the day. So again, nice to see that the mainstream is now confirming what you've seen in the market alert now for the last 12 months or more with regards to the potential ticking time bomb that is Deutsche Bank. On the implied volatility, well, we have a new record low at 578 for the blue line, the historic line, and 891 for the yellow line, the implied volatility. The lowest figure is 795, and this was in 2014, so we've got a bit to go yet as far as breaking records, but we're down at a level now where once this market is allowed to fall, it's going to go. The saying is stairway up, elevator shaft down. So you get the idea that we are going to see quite a significant drop. It's probably going to come, if I've got to make a guess, after September when Yellen says no to a further rate increase, obviously because of the potential fallout before the US elections. It's all engineered behind the scenes, make no bones about that. And the secret meeting that Yellen had with Obama a few months ago, no doubt, was a warning from Obama to make sure that Yellen got the message that this wasn't to fall apart on his watch. And no doubt that's going to be reinforced. And the problem really is that Yellen's credibility is starting to be at stake, as is Carney's. Well, in fact, he's never had any, because he's never actually followed through with anything that he said he would do since coming to office a few years ago in the UK. And Draghi is just a joke, printing another 60 billion a month and buying corporate bonds, bank bonds and everything to keep the illusion alive. So the credibility of these central bankers is shot, really, and is getting worse by the day because they're running out of tools. No doubt they will conjure up some other sleight of hand and some magical process that will delay the implosion of the financial systems. But at the end of the day, the markets always return to fair value. No government is bigger than the markets. And if the credibility goes, then the traders will start selling the US dollar. Once the credibility goes with the reserve currency, the rest just follows suit and implodes with it. And interestingly enough, on Wednesday last, when the FOMC market minutes came out, the dollar actually went down when there was no change in interest rates. Now, normally that would actually move higher, but on this occasion, the dollar index had a bit of a wobble, and we saw the pound move to the upside. So there's already, signs that the credibility card is starting to be played by the FX traders there. So you've got this situation here where the market is showing the signs of let's put it this way, at best a decent correction of probably 20% before they come back in and buy. Other than that, we're on the cusp of a really good sell to the downside, and it just depends how well they can bring it back given the other factors which I've just spoken about. But we'll have to wait and see, but we'll certainly have something brewing in the background there. Right, that's it for today. I will let you know tomorrow if the market's quiet and what to do, etc., as I've done for the last couple of weeks. Other than that, thanks for watching. Enjoy the rest of your weekend, and see you in the next one.